Welcome back to Trading Hour. Well, there's been a very sharp recovery in the market, especially in the last 20 to 25 minutes. The Nifty has recovered quite sharply from the lows it made at around 11 a.m. Now just down around 40 points. But as promised, we have Ashi Anand, CEO and founder of IME Capital, joining us now to discuss his views on the market. Thank you so much for joining us, Ashi. First up, wishing you and the team a very happy 2025. How are you looking at markets in the current space, and especially given the fact that you have digital-first portfolio, if you could call it that, how are you looking at that side of things?
So firstly, thank you so much for having me on today's show. Wishing all the viewers a very happy new year. Just kind of starting off with the market outlook. What we do expect markets to possibly remain a bit subdued over the next 3 to 6 months. What you have seen over the past, the second half of last year, is you're seeing a clear slowdown in growth. Economic growth has come down. You're seeing corporate earnings having weakened. And importantly, a couple of weeks ago, the Fed also changed their outlook in terms of interest rate cuts over the coming year to 50 basis points as compared to 100 basis points. So at this point in time, you're really seeing a market which is missing any important triggers for growth, and which is why we can expect it to possibly remain a bit subdued until you're starting to see growth starting to come back. And I think third quarter results will be very, very closely watched. So that's a broad kind of overall outlook on the markets. We believe that you are going to need greater signs of growth recovery or interest rates being cut in order to get the positive sentiment that we've had over the last couple of years, that kind of a market environment for that to come back. In terms of our digital portfolio, now this is a theme that we continue to be extremely optimistic about. It's a strategy we launched in Feb of last year. The strategy has done extremely well. It's up over 100% in less than a year and a half. Now, the core thesis on the digital strategy is that you are seeing a tremendous amount of value migration taking place from traditional businesses towards new age digital platforms. This value migration, we believe, is still in very early stages of adoption. There are multiple different fundamental drivers that are going to actually lead to accelerated digital adoption across the Indian populace. And this is something where we believe growth in these platforms can continue to be at a very high pace over the coming decade. And this accompanied by a shift towards profitability. And if you understand the business models, these companies tend to spend a lot at early stages, but can really focus on monetization quite significantly as they enter a monetization phase. A combination of very strong growth and a shift to profitability, we believe, can lead to very attractive value creation. And it continues to be, I think, the one space in the markets that we continue to be the most bullish about.
So Ashi, when you have to deploy incremental money in all the stocks that you own in this portfolio, which includes from a Nykaa to a Swiggy to Nazara to PB Fintech, Delivery, all the stocks are, a part of this. Some have fallen more than the others, some continue to rise. So incremental money deployment will happen in which company? Where is it that in your portfolio there is most value in terms of stocks?
So we're not getting to a very stock specific, right? We continue to be very comfortable on most of the holdings, and some of our larger holdings, the Zomato, the Policy Bazaars, these companies have run up quite considerably, but we are seeing a very clear longer term growth runway. And if you just take US tech as an example, between 2010 to 2020, most US tech companies were just in a structural bull market. And even if you bought 2 or 3 years later, you still had large upsides to play. We see something very similar in a number of our companies. Zomato is up 5x from our original purchase price. But if you're looking at a company that has a traditional foods business that can grow, that we believe can compound revenues at well over 15-20% over the coming decade, you have Blinkit, which is at very early stages of evolution, which could arguably compound revenues at 35, 40, 50% over the coming decade. These are very large growth numbers off very high bases. If you look at how these companies are going to transform in terms of profitability, you have already seen these companies come out of deep losses and moving towards adjusted EBITDA break-evens. But as you go into FY 27, 28, we believe the overall profitability levels of cash flow generation are all going to surprise the markets significantly on the positive. This combination of growth and profitability leads to still what we believe to be very attractive stocks, even at the current price. So incremental money that we are getting, we continue to kind of deploy in existing holdings. Some of the stocks that have moved up quite significantly continue to be amongst the top weights because these are also the highest quality franchises that we are seeing out there.
Understood that, Ashi. So incremental money too, you are comfortable deploying in the same holdings. Well, a couple of interesting holdings. You own both Zomato as well as Swiggy. You also own Zomato indirectly, through your holding is Info Edge as well. So give us a sense of, how are you looking at the recruitment vertical of Info Edge? There's also 99 acres. So what is your view on those particular industries? Do you feel that the digital disruption will come in there as well?
So, when we're looking at the portfolio, we really do bucket our holdings in terms of, there are differences clearly in terms of, one, both the growth potential, as well as the competitive barriers to entry and the ability of different companies to enter new adjacencies to kind of create value. And if you're looking at our portfolio holdings, that would really reflect in terms of the much larger weights we hold in certain platforms that we believe really fit these three buckets very, very well. Info Edge is probably a slightly lower weight. It's about 7 to 8% of the portfolio. That comes about from the kind of belief that on the core kind of Naukri portal, while you are being able to continue to grow and you are kind of growing in the mid-teens, IT growing a bit slower, non-IT growing faster, this is not the same level of growth that you are seeing some of the newer age digital platforms. That's happened because, one, you clearly have seen much greater online penetration of job searches in India. It's also a kind of a field which started, I think, a good 5-10 years before the Zomatos and the Naukris, the Zomatos and the Swiggies came about. So this is a segment which is a lot more penetrated, and therefore we aren't as optimistic on growth here as, say, for example, in some of the other areas. If you're looking at something like 99 acres, this vertical has held a tremendous amount of promise over the past decade and a half. But I think what is a concern is that they don't seem to really have a clear ability to monetize what is clear market leadership. The classifieds business, where is more just an advertising platform as compared to a Zomato policy bazaar where you're actually facilitating transactions. The level of value creation on these platforms is not as high as when you're facilitating transactions. Which is kind of where Info Edge is definitely an interesting company. They've got clear leadership in some interesting kind of verticals. However, jobs, we're not so sure on growth. On 99 acres, we're not so sure on the path to profitability. The one part we find quite interesting is the whole usage of cash flows to create a VC fund to fund new startups. That is something where a lot of value could be created. And that kind of reflects in terms of the way you see different portfolio weights on this portfolio.
Any new ideas that you are exploring in both your portfolios?
So there is Swiggy is a recent introduction. We are kind of quite closely monitoring how Swiggy narrows the gap, both in terms of growth and profitability, to a Zomato. Depending on how that plays around, relative weights between Zomato and Swiggy could change. That's the most recent introduction, which is in the digital portfolio. It clearly is something which has a tremendous amount of longer term value, and we really look at it as Zomato and Swiggy being a play on what we believe to be one of the most attractive themes in digital. So that's what we've got in terms of new introductions on the digital portfolio. There are a couple of SaaS companies that we are evaluating, but we've not yet made our mind up in terms of do we really include them or not. They may come in as possibly certain smaller weights. In terms of other more diversified portfolio, I think the space that we are watching quite closely, we believe within banking, certain segments have gotten quite badly hit because of the current problems that you're seeing in microfinance, as well as in other parts of unsecured lending. With a number of these stocks having corrected quite significantly, we are seeing quite attractive value there. We're not sure if these stocks have yet bottomed out, possibly still a quarter and a half. But that is the kind of space that we are evaluating quite closely.
Understood that. Thank you so much, Ashi, for joining us and giving us your view both on how exactly you expect the digital side of your portfolio to perform.